Yeah, it's interesting you're talking about these sort of diverging timelines across Asia. And as far as the reaction function is concerned, it's become very clear that while a lot of these central bankers have big pencils, they must have bigger races as well on the other end of that, given what we've seen of late from some of these central banks which have come out with surprises. One of those has been the PBOC. How are you watching China, given the data that we got more recently last week that is still throwing up some concerns about some of those worrying trends, and the PBOC, what it has to do now, because really it continues to have its work cut out for it, because we know that they are also facing a lot of constraints with the UN.
Yeah, well, one way is that market is concerned about like second half growth momentum losing speed, and for the full year not able to reach the 5% growth target. And from the recent data that we received from July, it's still showing the same situations. Like there's growth momentum decelerating a little bit better on the consumption front, but then we see IP and FAI growth really decelerating as well. So, and it's showing that actually for the growth supportive measures that the government has introduced on the real estate sector or on consumptions or on manufacturing equipment upgrade, this hasn't really shown very effective signs that it is supporting growth momentum. So market will still have doubt on it. I think going forward, the governments really need to do more, both on the fiscal front and also monetary policy front. Given that the Fed is expected to cut, there will be more room, right, for the PBOC to ease as well. I think they have been fast and even do a round of policy rate cuts before the Fed has cut, and this may actually continue, and we are expecting more easing over the second half of the year. In terms of the various fiscal supportive measures, I think the magnitude of it or intensity of it should be increased, right, to give the market more confidence in terms of the growth support. And I think that the support from infrastructure investment is likely to be expedited as well, possibly during this later half of the third quarter or towards the fourth quarter, if growth momentum is really lagging behind and there's a need to push to support growth to reach the 5% growth target.